Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 25th, 2024, and we're diving into Saia's latest earnings report for the third quarter of 2024. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Saia, a leading transportation provider, has just released its third quarter results, and there's a lot to unpack. Let's get started.
Revenue and profitability overview. Let's start with the top line. Saia reported a net revenue of $842.1 million for the third quarter, which is an 8.6% increase compared to last year. However, the diluted earnings per share decreased to $3.46 from $3.67. John, can you shed some light on this?
Absolutely. While the revenue growth is impressive, the decrease in EPS is primarily due to a slight decline in operating income, which fell by 2.5% to $125.2 million. The operating ratio also increased to 85.1% from 83.4%, indicating higher operating expenses relative to revenue.
What factors contributed to this increase in operating expenses?
The increase in salaries, wages, and employee benefits, along with higher fuel and operating expenses, played a significant role. These costs have impacted the overall profitability despite the revenue growth.
Operational efficiencies and future outlook. Saia's operational metrics show some positive trends. LTL shipments per workday increased by 8.5%, and the company opened 11 new terminals. How does this impact their future outlook?
These operational improvements are crucial for Saia's long-term strategy. The expansion into new terminals, particularly in the Great Plains states, allows Saia to provide direct service across all contiguous 48 states. This not only enhances their value proposition, but also positions them for future growth.
CEO Fritz Holzgrief mentioned the importance of these expansions. What are your thoughts on his comments?
Holzgreif's focus on footprint expansion and customer experience is strategic. By opening new terminals, Saia is not only expanding its market reach, but also improving service quality, which is likely to attract and retain more customers.
Financial position and capital expenditures. Moving on to Saia's financial position, they ended the quarter with $14.4 million in cash and $191.0 million in total debt. John, what does this tell us about their financial health?
Saia's financial position reflects significant capital investments, with net capital expenditures reaching $873.2 million. This includes strategic investments in property acquisitions, which are part of their long-term growth strategy. Despite the increase in debt, these investments are aimed at enhancing their service capabilities and market presence.
CFO Matt Batta emphasized their commitment to growth despite a muted freight backdrop. How should investors interpret this?
Investors should view this as a positive sign of Saia's proactive approach to market challenges. By investing in infrastructure and expanding their service network, Saia is positioning itself for future success, even in a challenging economic environment.
Risks and strategic initiatives. John, let's discuss some of the risks and strategic initiatives highlighted in the report. Saia's debt levels have increased and they operate in a highly competitive industry. What are the potential risks here?
Indeed, the increase in debt is a concern, especially in a competitive market with pricing pressures. However, Saia's strategic expansion through new terminals is a calculated risk aimed at mitigating these challenges by enhancing service offerings and expanding their customer base.
The report also includes several forward-looking statements. What should investors keep in mind?
Investors should be cautious with forward-looking statements, as they are subject to various risks and uncertainties. Saia's management has outlined potential challenges, including economic conditions and operational costs, which could impact future performance.
Key takeaways. In summary, Saia has shown strong revenue growth and strategic expansion, despite some challenges in profitability and increased debt. John, what are your final thoughts on Saia's performance and investment prospects?
Saia's commitment to expanding its service network and improving operational efficiencies is promising. While there are risks, their strategic initiatives position them well for future growth. Investors should keep an eye on their ability to manage costs and leverage their expanded network.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Saia's performance in the comments below.